everyone, and welcome. Thank you for joining us for today's Meet the Analyst webinar, New Ways to Boost Mobile App and Advertising Revenues in 2023. I'm your host, Evelyn Mitchell, analyst at Insider Intelligence based in New York City. And I'm joined by my colleague, Principal Analyst Yory Wurmser, who is in New Jersey. Hi, Yory. Great to have you here.
Hey, Evelyn. Great to be here.
Before we get into the main presentation, I'd like to thank InMobi for making today's webinar possible and welcome Kunal Nagpal, Senior Vice President at InMobi Exchange. Kunal is joining us from the Bay Area. Hi, Kunal.
Hi, Evelyn. Great to be here.
Great to have you here. A few things before we dive in. We have a ton of information to share with you today, but there's no need to take notes if you'd rather not, because we will email you a link to view the slides as well as a full recording of today's presentation. But we do want you to participate. Just use the chat window on the right of this video feed to submit questions at any time during the presentation, and then we'll get to as many as we can during the Q&A session at the end of our presentation. So with that, Yory, let's get started. Take it away.
Thanks, Evelyn, and thanks to everyone for joining us for today's webinar, where we will review our mobile apps forecast and talk about new ways to boost mobile app and ad revenues. So let's start with the agenda, as you said, Evelyn. I'm going to start by going over some of our numbers about how people are using apps. Next, I'll talk about how apps are monetizing those users. Third, we'll look at what's driving those monetization trends. And finally, we'll look at some of the opportunities and strategies that advertisers can take to take advantage of those trends. All right, so that's the plan. Let's start with how people are using apps. And I want to start with this slide to set the context. And the context is that the average smartphone user is spending more time on their phones every year. This year, for instance, we're spending an average of 8 minutes more per day than we did last year, and that's in the US. And it's over 3 hours. We're spending a ton of time on our smartphones. It's not a big increase when you look at 2021, but if you look at 2020 and during the pandemic, we increased our time spent almost half an hour. So just a huge amount of time that we're spending on our phones. And the majority of that time is in apps, about 2 hours and 37 minutes this year. So really just a lot of times on phones and especially within apps. And one more thing about this slide that I want to point out, and that's just that just about everyone is using smartphones and apps. Of the 256.3 million smartphone users in the US, 97.5%, or about 250 million people, use apps. So it's pretty much a universal behavior when it comes to digitally connected people. And the growth rate, and I just want to point out the 2.0% growth rate in apps because it'll be relevant later on. That's pretty much just organic growth in smartphone usage. Pretty much everyone who has a smartphone is already using apps, and the growth is coming pretty much from new smartphone users. So I wanted to start with that slide because this slide seemingly tells you a slightly different story. We're using about as many apps as we did before the pandemic, actually a little bit more, but not as much as during the height of the pandemic. Now, the reason for that is a little bit complicated, but I think basically we did a lot of searching, we did a lot of exploring during the pandemic, tried new apps, spent more time on our phones during the pandemic, and we're going back to a more natural cycle now that we're back at work, we're out in the world, and we're using a little over 20 apps per month. So we're still using a ton of apps per month, just not quite as many as during the pandemic. And as behaviors settle in, that number is going to slightly go down and throughout the rest of our forecast period, but still, I mean, not in a really notable way. We're seeing the same pattern in app installs. The one big difference is the big drop happened last year, and it makes complete sense. During the pandemic, we were all searching for new apps. When we started to get bored with our phones, we just did a lot less searching. And we're back to a kind of a plateau now where we're looking for we're downloading slightly less than 20 apps per year at this point. There is one more trend that I want to highlight, though, and it goes back to that 2.0% growth rate in app users overall in the country. And that's if you're looking at apps over all app categories overall, you're seeing a steady growth in every single category and a growth that exceeds the growth rate for app usage overall. And some of this can be explained just with changing patterns. Shopping apps and grocery apps since the pandemic have continued to experience rapid growth and pretty serious growth. We're just using shopping apps and grocery apps more than we did in the past. Other apps saw a huge surge of growth during the pandemic and then dropped off last year, and now they're returning to kind of a more normal pattern. You can think about fitness apps or dating apps in that category. A few other categories saw a big drop during the pandemic and now have seen a resurgence. And those include categories like navigation apps and travel apps. But one thing I also want to point out is just the size of audience for some of these. I mean, we're talking well over 100 million for a bunch of different app categories, including a few that are not in the right chart, but just in the bullets on the left. Over the top, video, OTT video users on apps and on mobile web are over 200 million users with a 2.5% growth rate. Audio is at 173 million, and social media is over 200 million as well, at over 2.3% rate. So every category we're measuring is growing faster than overall app usage. And I think that just means we're using fewer apps, but we're using a wider variety of apps. We're settling on winners within each category or within some categories and going with them. One last category that I want to discuss is mobile gaming. Mobile gaming had a big spike during the pandemic, not as big as some like shopping, but it grew 6.7% in users in 2020 and a whole lot more when you look at minutes spent. Since then, we've really seen a plateau, not quite a plateau, but a pretty slow growth. This year, we're expecting 1.6% growth rate in app usage and gaming app usage. So those are some of the top line app user numbers. Let's look at the other part of our forecast, which is about how apps are monetizing. And the one thing that is really clear when we look at these numbers is the mobile advertiser is still the main way that apps monetize. It continues to grow. It's not just the biggest, but it's also growing at a pretty fast rate. After growing 39% in 2021, mobile ad spending will grow another 18.1% this year to reach $169 billion. And as a reminder, this is just US ad spending. So that's just a huge amount of money. It's about half of all US media ad spending overall and about over 2/3 of digital ad spending. And most of this spending is happening in apps. According to our estimates, about 81.5% of mobile ad spending occurs in apps, which would mean about $138 billion in 2022. It's just a huge amount of spend that's going into mobile and specifically into mobile apps. And it's especially big when you compare it to the amount of money going into app purchases. So I don't want to downplay the size of in-app purchases, but it is not nearly as big as mobile advertising. So we define in-app purchases as both subscriptions and virtual goods. And by virtual goods, we only include things that apply to that specific app, such as a download fee or a virtual currency within an app or a filter for a photo app or more detailed maps in a weather app. So those are virtual goods that we count, and we count subscriptions. What we don't count are NFTs or crypto purchases that are used across apps. So we're really looking at app-specific purchases, like, as I said, a currency within a game or a premium feature. But even, as I said, even when you count all of those things together, the sum in the US is less than 1/3 of what advertisers spend in apps on advertising. The sheer size of mobile advertising shouldn't overshadow the importance of in-app purchases for developers, though. And they do have an effect on advertising strategies, which I'll talk about a little bit more later on. And they are growing. After a really big jump during the pandemic, they continue to grow pretty quickly, not as quickly as in mobile advertising, but they're still growing. So the majority of the sum for virtual goods, for in-app purchases is on virtual goods, about 56% this year. I want to make clear that that's starting to go down a little bit as subscriptions take off, and that's really clear in this slide here. Subscriptions now make up about 44% of in-app purchases, and they're becoming a bigger portion of that in-app spending every year, growing 16.2% this year. It's not that much slower than the 18.1% of mobile advertising. And as a result, subscriptions will continue to gain share as a percentage of in-app purchases all the way through about 2025, when the trend patterns are pretty much lined up at that point. And we're going to see growth rates that are pretty similar in virtual goods and in subscriptions. So the majority of virtual goods spending is, and not surprisingly, is in games. If you just think about how many premium games people buy and how many virtual currencies people have within games, or extra lives, or extra energy that you can buy with purchasing, it's really one of the main ways that games monetize. And all of those app downloads and microtransactions will add up to about $18.8 billion in 2022 in the US, which is about 79.5% of all virtual goods spending across app categories. And it's also about 96% of in-game in-app purchases. So it's all about virtual games when you're talking about games. And you're seeing that also with just in the news today and yesterday, Google Stadia shutting down, as people are just not buying these premium subscriptions in gaming at a very high rate. The story is really the opposite in non-games. Subscriptions are growing fast and will account for 78.5% of non-game in-app purchases in 2022, and about 95.8% of all in-app subscriptions. So virtual goods are also growing in non-games, and they're a much bigger portion than, let's say, subscriptions are in gaming. But what you're seeing, though, is after next year, the virtual good number is going to basically plateau. We're not going to see a lot of growth in things like premium upsells. We'll see a little bit of growth, but not much. We're going to see more growth still in subscriptions, as that's still going to drive growth in non-games. And just as a reminder, NFTs are not counted in this. Given the pretty rapid rise in subscriptions in non-games, it's not really surprising that non-games now account for the majority of in-app spending. And that's really new. I mean, we've been looking at this for years, and it's always been a significantly bigger portion of in-app purchases going to apps and being captured by apps. And it's all about those premium games and the currencies within games. But with the rise of subscriptions, that's changed this year. It's kind of a notable change this year, where we're finally seeing non-games make more money in in-app purchases than games this year. So what's driving these monetization trends? So the first obvious answer is that people are just spending more time online. I mean, it's one of those things that I discussed earlier. If you're spending more time in apps, there's probably going to be more money spent there. It's a pretty direct and obvious relationship. But there's more than just that going on. It's not just that there's a direct relationship between eyeballs and spend. And it's true that there's always often a lag with new media where the eyeballs exceed the rise in spend. You saw that with mobile for years. But what we're seeing now, I think, is not just people getting used to buying mobile advertising and getting used to the idea of mobile. And that's already been the case for years. I think what we're seeing is just a really big increase, or one other factor is a really big increase in m-commerce dollars, which is driving increased engagement. Advertisers don't just want the eyeballs, they want the engagement and they want the conversions. And over the past couple of years, they've been getting more and more of both of those. A prime example is the rise of shopping apps. We've already looked at some of the other numbers that have shown a big jump in time spent in advertising and the number of users in shopping apps. When you look at the amount of time spent in shopping apps, it doubled between 2018 and 2021. These are global figures by data.ai. And they're also only for Android. So if you add in the iOS numbers as well, we're talking tens of billions of hours more than this. So just a huge amount of time in shopping apps. And I also want to highlight another interesting trend within shopping apps. So those numbers were global, and these are back to US numbers. In early 2020, Amazon absolutely dominated the shopping apps with 4 out of 5 daily active users of mobile e-commerce using the Amazon platform. In 2022, they're still kind of dominating, but the number is only, the portion is now only 3 out of 5. And other apps such as Shine have really gained a lot of users. Shine went up from 4% to 14%. And the rest of the top 10 also increased as well. So we're seeing a diversification of e-commerce apps and shopping apps that people are using. And one other thing, these numbers exclude Walmart and Target and other traditional retail apps. And Walmart is the number 2 app in the US. I'm sorry, number 2 retail app. It's, I think, the number 21 app altogether. That's important for advertising for a number of reasons. People are buying stuff online, but that also means that a lot of these apps, many of which have retail media networks, some of them have retail media networks, they're growing really rapidly. And this year, we're expecting these retail media networks to generate over $40 billion in ad revenues in 2022. And that's it's starting to become a big portion of mobile advertising. Now, I want to make clear that those numbers aren't just mobile ad spend, they include desktop ad spend, but the majority of that is probably going to be on mobile. And of course, there's also social media networks that are big drivers of e-commerce and m-commerce, especially m-commerce. Almost all social commerce is being driven on phones. And social commerce is an area where the social media companies are not making money on the affiliate fees that much or commissions. They're really making money on the advertising. So the more social commerce grows, the more advertising spend goes into social media companies. So between social media, between retail media ad networks and the general growth in m-commerce, I think you're seeing all of that push mobile advertising up, or one factor that's pushing it up. So that's one factor, and that's specifically focused on mobile advertising. What explains the rise in subscription purchases? Is it a part of an overall trend? It is a part of an overall trend towards subscriptions in general. The chart on the right shows US digital subscription buyers in the US. This is for digital products and real products. So things like, I'm blanking on them, but services where you get shipped clothing every month, or you have someone come in every month. Those type of services are growing at a rapid rate. We're also seeing pretty strong growth in paid audio, which is growing from 127 million this year to 146 million in 2026. And of course, over the top, which is also growing pretty strongly from 220.1 million this year to 234 million in 2025. So people are just buying subscriptions, not just within apps, but overall. It's just a trend within e-commerce that we're seeing more and more subscriptions. A third factor is really the app privacy rules that have changed the mobile advertising landscape. And I'm talking about specifically really about iOS 14.5 and some of the additional rules in iOS 15 and in Android. And as we discussed earlier, mobile advertising has continued to grow strongly. So it hasn't shut down mobile advertising, but it has made it harder for some apps to gain new users. And it's also shifted some of the advertising spending to Android. And you can see that pretty clearly in this chart here, which shows spending shifting to Android after the implementation of iOS 14.5. And Evelyn, I know this is a chart that you've spent a lot of time going over. When you look at this, what do you see?
Yeah, it is. I would recognize that chart anywhere. And what I see when I look at that chart now is the potential for the gap to close, because app tracking transparency has undoubtedly revolutionized the mobile app ecosystem. Maybe not so much in a easy to digest way for a lot of people, but it's changed, and you can see that in the numbers here. And coming down the line, Google is planning on deprecating the Google Ad ID on Android devices, similar to what's happening with the identifier for advertisers, IDFA, on Apple or iOS devices. So there may be in the future, kind of that gap will start to close a little bit, depending on how advertisers and how apps start to navigate an ecosystem without any of the identifiers that have been previously relied upon, not just for targeting, but also for measurement. So it remains to be seen how this goes. And, Google keeps pushing back their deadline. So it's TBD for sure. But that's the biggest thing that I see when I look at that chart.
Yeah, no, that makes sense. And let's hope Google, when it deprecates the ad ID, will do a better job than Apple did with SK Ad Network, which just wasn't ready for prime time when it came out.
All indications are that there is a little bit more collaboration going on Google's end, so hopefully it won't be as jarring to the market as Apple's similar changes were.
Fingers crossed, right? So for a lot of apps, one other factor I think from the deprecation of or the app tracking transparency and the deprecation of app tracking, it's created an incentive to find other ways to make business. And I mean, you've seen it in a bunch of different ways. I think the most extreme, or maybe not the most extreme, but the one with the biggest impact is Facebook's headlong dive into the metaverse. It's not just about the ad ID, but they're definitely looking for new ways of controlling ecosystems and making money. And you're seeing a lot of apps that are a lot smaller than Meta do not as dramatic moves, but they're looking for hybrid ways of making money. You're seeing some studios, some hyper casual games add in-app purchases. Sonic Studios, they started adding some in-app purchases as well, and they saw a 7 to 10% lift in their lifetime value from their apps as a result. So definitely an effect there. You're seeing subscription services add premium upcharges. This has been something that's been around for a while, but you're seeing more of that. Things like Disney Plus adding, having Mulan or first run movies be charged extra, or the premium upcharges for seeing more stuff, more weather maps on the Weather Channel. You're seeing advertising-based apps try to add some sort of subscription option to where you can pay to the not see ads. I think Twitter Blue is a good example of this, but you're seeing others as well. And lastly, you're seeing some advertising-based companies try to add e-commerce. There's a lot of talk about super apps and things like that. For the most part, when you're talking about social media, it's really to drive advertising still. TikTok is still mostly, in terms of their own revenue, is about that, but they do have a huge amount of in-app purchases that are used as tips for creators. And in China, ByteDance has already been able to monetize some of that for themselves, and I wouldn't be surprised if that happens here. So you're seeing a lot of different ways to monetize beyond advertising. So what does all of this mean for advertisers? What do these new app behaviors and changes to monetization open up for in terms of opportunities? So the first one, I'm just going to go back to gaming. Gaming, it's small when you think about overall mobile advertising, but I think there's a lot of opportunity there for brands. In-game advertising has always been about ads for other games. That's begun to change, but I think as games start to get more data than they have in the past, there's going to be more of a more of an ability to have opportunities within games. I think the other thing that you're seeing is that gamers themselves are more aware of the value exchange from ads. In 2017, Tapjoy did a survey, and the majority of gamers did not want to see ads in exchange for free games. That's switched in 2022, where now the majority of gamers are okay with ads if it does reduce the cost or give them a free experience. So definitely an awareness within gamers and an openness to using ads in a way that wasn't the case a few years ago. And we're seeing the effect in advertising in games. There was a big jump in 2021, and you're still seeing growth in gaming, mobile gaming advertising now. And as I said, it's only $6 billion in 2022 in the US, so it's not a huge amount of money, but it is growing, and I think it is an opportunity out there for advertisers. The growth in gaming is also happening mostly in Android. That's, I think, obviously another effect of iOS 14.5. There's one more thing here that I want to point out. So it's showing the Android, the share of in-game ads as a percentage of overall ads continues to increase in Android, but it's kind of leveled off in iOS. And I think that's part of it, that some ad dollars are going to Android, but I think some ad dollars are also going to Apple itself. Because Apple ads themselves have grown quite a bit as the App Store has become really a big search tool now and a lucrative search tool for Apple and Apple ads. So iOS is the App Store is probably cannibalizing some of the iOS figures in ad spending as well. All right, so gaming is one opportunity. A second opportunity is in identifying apps that have a lot of rich first-party data. And when you look at the growth in retail media networks and some of the other apps with multiple ways of making money, a lot of them have really rich first-party data. And in fact, some of these also have zero-party data, so data that's coming from surveys or through signups where consumers are voluntarily giving some really valuable first-party data or zero-party data that these publishers and app developers can use to help target the advertising that goes there. Evelyn, again, I know first party is close to your heart. What do you see? What do you see going on in terms of first party right now?
Well, first party data is really interesting. And I'm glad you brought up zero party data too, because I think one of the most interesting things going on in this space is a reckoning with what it means to have first party, zero party, third party data. What is the ownership like of this data? And that the relationship that the classification of data, whether it be zero or first or second or third party data, what that means for the consent of the user. I've heard whispers about how consumer education, even if, I loved that data you had earlier on gamers understanding and willing to participate in that value exchange of free content for data. But there's also a lot of work that can be done to make sure that when consumers are giving their consent to have their data taken in order to receive a free experience in exchange for that there's a full understanding of where that data goes and what their course of action can be if they decide at any point that they no longer want to be a part of that relationship. And so there's definitely some progress that needs to be made there. That is, it's not clear, not just because there's a lack of education, but because sometimes it's unclear where that data goes, and it's unclear whether or not there will be an easily identifiable out if and when a consumer wants to take that out. So there's a lot going on in the first-party data space, but of course it is also really important as we enter this new world where third-party identifiers are less commonly available, and first-party data can really help kind of bridge some of those gaps that are starting to really become very clear in the market.
It's a great point you made about the opt-in and really the transparency around it. It's so important when it comes to first-party data that the consumers are in agreement with how you're using that data. And also, I'm glad you brought up second-party data, because I guess for brands, retail media network data is second-party data. So definitely zero-party, first-party, second-party, and even cohort level third-party is all going to be important for advertisers. So last thing I want to take a look at is another impact of hybrid models beyond just that richer first-party data. And that's the fact that apps have multiple sources of revenue want to have higher quality ads. If you're making your money as an app developer on subscriptions or on selling virtual goods, you don't want to tick off your users with too much advertising or too disruptive advertising. You want the advertising to be high quality and immersive, and ideally contributing to the experience of the app. And there are multiple ways to do that. I want to highlight three, though. One is rewarded ads. And you can see that in this chart on the right, where one advice gamers give is just to really reward the users, the viewers of the ad. Excuse me. You want people. A really effective ad is one where people get something out of it. It's not just apparent, but there's really value added. In the past, I've looked at KPIs that show very high levels of engagement and clicks when it comes to rewarded ads. I couldn't find a really recent version of those KPIs, but in general, rewarded ads have been really successful. Secondly, it's really about the branded experiences. Brands are exploring a lot of different branded experiences. I like this one, and it is spooky season now. This is from last year's spooky season. Chipotle had a storefront in Roblox where they were giving away real burritos in real Chipotles if people visited their Roblox Chipotle. So I think that's a great example of how people are using virtual worlds or branding within games, such as billboards within games that are actually part of the game experience, and other ways of actually immersing the ad within the game or within the app that really doesn't detract from the experience and in some ways adds to it. I think we're going to see more of that. And lastly, there's a possibility of virtual goods. I want to touch base on NFTs, which a few brands are trying. A really notable example is Nike, which bought virtual sneaker maker RTFKT last year, and some of their models, some of their digital virtual good models, NFTs, have earned hundreds of thousands of dollars from individual virtual sneaker models. So there's just a lot of money flowing into NFTs right now. I'm not looking at you, Evelyn. I know you're dubious about it, but I'm a little dubious too. But we'll see. It seems to be something that's really resonating with an age group, a cohort in the 18 to 24-year-old crowd. 20% in this survey from Civic Science said that they had bought a piece of virtual clothing in the past year. To be honest, I'm pretty surprised about that. Despite my youthful appearance, I'm not in the 18 to 24 cohort, so maybe I'm just missing it, but I'm a little dubious. I know I've had these conversations with Evelyn, but it's definitely a growth opportunity now for brands that are focused on that cohort. And it's very possible that NFTs will stick and grow in importance. So I'm being a little bit glib here, but I don't want to dismiss it altogether. I think there's a lot of opportunity here. I just don't know how high the ceiling is. Anyway, so I just want to quickly wrap up. Key takeaways I just want to go over is that IAPs, in-app purchases, are growing pretty quickly at about 13% this year to $42.3 billion. Those are real bucks that a lot of developers are earning, but they're still way behind in terms of mobile ad spend. Mobile ad spending is $168 billion, almost $169 billion, $138 billion of that in apps, just a huge amount of money there. Second, the share of subscriptions within in-app purchases is growing, and that's actually growing a non-game app in-app purchases as well. So subscriptions seem to have a lot of life in them as well. Third, app publishers are embracing a wider variety of monetization strategies. You're seeing a lot of hybrid models, a lot of different models. I think that's going to provide a lot of opportunities for advertisers and for things like embedded commerce and other things. And lastly, hybrid models are generally going to demand higher quality ads, as apps want to keep their subscribers and sell virtual goods. They're going to want to have higher quality ads. So anyway, with that, I'm going to hand it back to Evelyn.
That was great. Thank you, Yory. We've had some really interesting questions come in, but before we address those, let's hear from our special guest from InMobi, Kunal Nagpal, Senior Vice President. Welcome again, Kunal.
Hey, Evelyn.
All right, let's start by addressing the elephant in the room. It's already made an appearance today, several appearances, in fact, which is the new privacy rules that have had a significant impact on the app economy, including app tracking transparency with iOS 14.5. And then there are some other privacy restrictions coming down the pike, and it's made advertising and attribution of advertising significantly more difficult in the in-app space. So what is your take on this?
Honestly, it's a new world. I don't think anybody should expect that the ROAS that they got before 14.5 is going to remain the same. It's not, right? I mean, when you remove the underlying currency and you don't have a viable alternative, ROAS will change. And that's just a reality we live in. I think if you think from the buyer side's point of view, they've had to rapidly adapt. I think we briefly touched upon how it wasn't exactly prime time ready when it came out, the whole ATT framework, and how the whole ecosystem sort of took time to adjust to it. I want to say that I think a lot of the advertisers are still adjusting to it, right? It's not just a struggle for Meta or Snap, for example. It's just a genuine buy-side problem. And the way I see it, as they think of ROAS going forward, there are a few things that they need to do. The first is, because it's no longer the single currency that helps you run the campaigns and measure the effectiveness and all of that, you really have to start thinking as a portfolio. For some advertisers who have first-party data, it's actually great if they can go and find a match with the publisher's first-party data. That may not be always possible, though. So, enter universal IDs. You have UID 2.0 to ID 5 to, RAMP ID. There are a few options out there. And for some advertisers, that will actually work better. For some campaigns, it will work better because the publisher may not have necessarily a first-party data or the mechanism to share that with you, right? Or if nothing else, I think they should be considering, cohort-based contextual targeting, because that's really not linked to an identifier at the base. The point being that there's no one size fit all. They really should be thinking at a campaign level, what would work better? Obviously, it makes life a lot harder as an advertiser if you have to go and check, okay, will this, strategy work? Will that strategy work? But that's the world we live in. And sort of it's hard to argue, a reversal to when there was no privacy at all for the consumer. So it sort of makes sense. I think the other part, I think you sort of briefly mentioned that also, Evelyn, this is not just about targeting. I think ATT was more brutal for everybody involved because attribution became so much harder, right? When they first came out with, Scan 1.0, it caused more chaos than people imagined because, well, you couldn't tell if my money is going to the right partner in the ecosystem or actually not, because there's just not enough data feeds. People had spent 5, 6, 7 years building, big data models, and suddenly the ingestion of data just stopped. And I'm saying stop, not like literally stop, but like it just squenched to so little that suddenly your models went haywire. And now you can't tell if I'm working with, a partner A versus partner B, who's actually performing better. And that's a serious problem for somebody to just, think P&G. I'm going to spend, a couple of $1 billion on advertising and I can't tell who's performing better. It's a disaster for them. And it was, right? To be honest. I think the one other area or one other lens rather, is that with this whole change around ATT and soon as GAID goes away, if I'm an advertiser, I need to start asking the question, do I really need 30 SSPs out there? Is my DSP that has worked well for me for the last 3 years still the best choice? Am I using a DMP that still works for me, right? I think it's time to sort of take a step back and think about those options, because it's no longer the same world that we all had 2 years ago. So from a buy side, I think everything has changed, and unfortunately there's no single answer.
Yeah, I that totally makes sense. And, advertising has never been a one size fits all situation. So perhaps there's some opportunity that is buried beneath the chaos.
Yeah. Apple definitely found that out, right? Yory, you mentioned how Apple's own advertising has kicked into higher gear. That's, direct benefit to them.
Absolutely. All right. Well, as Yory mentioned earlier, the number of app users continues to rise, but there's limited room for growth, right? Of the 156.3 million US smartphone users in 2022, this year, nearly all of them, 97.5%, already use apps. So what are your thoughts on the maturation of the app market overall?
I think there are two lenses here. One, sort of going back to your sort of data that you were sharing, the number goes from like 20.4 apps to somewhere like low 19 point something. And that's the sort of the state of the US market, arguably the most important market, but that's the state of the US market, where you have a maturity curve sort of, kicking in. And by no means I'm the average, user here to use as an example, but as I think of my own phone, there are certain apps that I'm going to continue to use regardless. And let's say that's like 5, 6, 7, 8 apps, because that's how I live my life, whether it is, a Twitter or, my mail client or whatever it may be. Those are there. They're not changing. But the remainder, the 7 to 15 apps for all consumers seem to be changing. Like they seem to be churning through those apps, right? We talked about how Amazon lost its shine. Well, I don't no pun intended to the Chinese company, but they lost its shine and went from being 4 out of 5 to 3 out of 5. So clearly people have churned through Amazon app and said, well, maybe I should look at Walmart. Maybe I should look at, Shine. Maybe I should look at something else. So there's a churn happening in the remainder of the portfolio of apps on somebody's phone. And I don't think that's going to change. Every week, every month, every quarter, there is somebody who does better. Somebody who's made an app that works better, a game that works better for you, a commerce app that works better for you. So I think that sort of continues the whole play of there is maturation of the overall apps, but there's still a lot of opportunity for app developers and intern advertisers to work through those non-sticky apps, if you will. But honestly, it's also about thinking about the world outside of US. And the more you go, eastwards, there's maybe like 2 billion people out there who don't have good smartphones or any smartphones for that matter. And as they start, upgrading to better and better phones, that world of app consumption is dramatically different, honestly, from the way US works. If you think of Asia, there are some economies where mobile web is less than 5%. We talked about, 20/80 split of time spent. It's less than 5% because the whole economy works on app first. And as you think of these 2 billion users and how they download apps, you can imagine how much more time they are going to spend on those apps cumulatively. Like, I wouldn't be surprised if you walked into, Nigeria and said, wait a minute, people are spending 6 hours a day on their apps. But that's the power of, being an app first sort of a setup. That's how I think of, the maturation.
Sounds like there's a lot to be excited about.
Yeah, for sure.
Great. Well, thank you, Kunal. Now it's time to get into our audience Q&A. We've received a lot of great questions, so let's dive in. This one is for Yory. What is your opinion on Google Topics? From your vantage point, how much traction do you see it having?
Oh, I think this is one you can answer. But I'll give you my answer, but I wouldn't mind hearing what you have to say. I think cohorts are, with these device level cohorts, the whole privacy sandbox I think Google has done a nice job about bringing in the ad community and getting feedback. So I think Topics is an improvement over some of the Flock and Fledge and some of the other attempts there. We'll see what happens. I think it's pretty promising. I'm curious to see what type of uptake you've seen or response you've seen, Kunal, on your end?
I think as a general idea, client-side auctions are the right thing to do. I think topics is much more on the website, and while we may be in-app experts, that concept is not lost on us. I think, like said, when Google ID goes away, if you think of moving to client-side and auctions, you're actually thinking the right way, because that protects the user's privacy, it protects the publisher's first-party data, and yet gives pretty solid ROAS.
Excellent. Well, for my part, I think we're still in beta, I want to say. I think that's the phase that we're in right now. It could be alpha, it could be beta. Sometimes I get confused with the Greek letters, but we are still in trial, right? And it is still very early days for topics because the trials have not rolled out to every person that uses Chrome, which means that the scale of testing is very limited, and it's really hard to get good quality insight from those kinds of tests. So I think it's still a big TBD, but Google has a lot of power, so it would not surprise me if it gets significant traction, if only because Google is Google. So we'll see. All right, another question here for both of you. Can you share your perspective between mobile web and mobile app ads? What's going on there? And is there a significant difference in this, as you said earlier, Kunal, this new age of mobile advertising?
I can go first, and Yory, love to hear your take on it. I think, look, at a fundamental level, we do think apps are the right environment. If your users are spending 80% of the time, and again, sort of citing US data, if your users are spending 80% of the time within apps, as an advertiser, you can't be spending anything above 20% of your budget in mobile web, right? And yet we see that disconnect happen so often because mobile web brings with it a familiarity, right? It's the desktop world shrunk to a smaller size, same concept, same issues, same problems to solve on the third-party cookies. And I think that there's always this, constant struggle for the buyer side to say, well, but in-app is harder. It's harder to think about in-app because, it's a closed, loop, because you have SDKs over there. It's harder because you have ATT that has sort of disrupted the whole setup. And they're not wrong. But again, if the users are spending more time in-app, how should you not be thinking that way, right? So it's just a sort of a philosophical point from our point of view.
Yeah, I basically agree. I think there's a move, or not really a move, but there is a trend towards web apps, which are basically reproducing the app experience, just not using Java instead of or different language than native, than various native, than iOS or Android. I think in the end, Kunal's right that the majority of time is going to be an app. There are probably opportunities, especially when you're talking about commerce and where people are going through the web and looking at media and trying to link there for web apps, web ads. But in general, I think going through the app ecosystem is probably the way to go.
Awesome. This one is for Kunal. What is your singular best piece of advice for advertisers today, especially as economic headwinds start to really send a chill through the ad industry?
I mean, look, there's an sort of economic uncertainty, and yes, it's more pervasive than at a geographic level than what may have seemed even 6 months ago. At a fundamental level, the world is shifting its consumption to what is the most intuitive form of consumption of media, which is your mobile phone, right? Within that, we talked about, in-app sort of dominating over the website. And as an advertiser, the second sort of you realize that this is a trend that cannot be reversed because that's how humans work, you have to think about what you will do, but more importantly, what you will expect from your partners going forward. I think a lot of the struggle happens because the advertisers feel like they're sort of left alone. They're sort of been abandoned by the ecosystem. And so now all the struggle is theirs. But I think that's where what I mentioned earlier, do you need to work with 30 SSPs? Maybe it's time for you to think about the partners who actually will help you solve the issues of not just targeting, but also attribution. They'll help you think about ROAS generation in ways that you probably didn't know earlier, right? So for me, if I'm an advertiser, I'm going to start leaning more on the partners who are genuinely the experts in here.
Great advice. All right, we have time for one more question, and I think this is a really great one to wrap with, and it's for both of you. What is the most exciting area of mobile app innovation that you personally are watching very closely right now? And we'll start with Kunal. Yeah.
Go first. Actually, it's something that I mentioned earlier. Google Topics may have its own sort of controversy, and it's easy to sort of question Google and their motivation and their incentives, but philosophically, it is the right direction. Client side is the right place to be going forward, because you cannot be against the tide of privacy. And the only place where you can be certain that privacy will be front and center is when you sit on the client side. You do not leak any data out. You don't let any, consent issues come in the way of the user experience and the publisher's interests, which don't necessarily have to be in conflict, right? So from our point of view, client side auctions, client side sort of conversations around, cohort-based targeting, those are the kind of areas that we are really, really keen to dive into.
Yeah, I mean, I would agree 100%. I think when you're talking about mobile advertising, that's really the big trend and probably the most exciting one. I'm a tech geek though, so I'm going to say the thing I'm most excited about is kind of the introduction of things like computer vision and augmented reality, and how visual search might change advertising and how augmented reality might change advertising. I think that's not a 2023 thing so much, but I think you're going to see more of it in 2023. But I think down the line, and towards the end of what we are looking at as our forecast period, you might see some really interesting ad applications and just experiences using augmented reality and computer vision and things like that.
Awesome. Well, unfortunately, that is all we have time for today. Thanks again to Yory for joining us, and a very special thanks to Kunal and to the team at InMobi. Our eMarketer production crew also deserves a huge thank you for all their work behind the scenes. We quite literally could not do this without them. As promised, we will be emailing you a link to today's slides along with a full recording of the session, so keep an eye out on your inbox for that. And then before we wrap up, let me take a moment to tell you what's happening across eMarketer's channels. You can register for upcoming live analyst webinars and Tech Talk webinars at emarketer.com/webinars. On the audio side, don't forget to tune in to Behind the Numbers, eMarketer's daily podcast, which you can find anywhere that you listen to podcasts. And finally, please check out our newsletters. We have a couple of options across retail, finance, and digital advertising, so there's something for everyone. And if you haven't already signed up, you can do so at emarketer.com/newsletters. Thank you for joining us, and enjoy the rest of your workday, and have a wonderful weekend.